Welcome back, guys. It's the Crypto Sniper coming at you from the Red Room on crypto. We haven't discussed it in a while. And when we go quiet, there's a couple of things going on. Usually, A, we either don't have a particularly strong read. B, the markets aren't looking that's worthwhile or positive for us to be engaged in. That was also one of the issues we had, and we've been kind of biased to defense in the last two or three videos. We had an M top over here that performed to the downside. You'll remember it did a bit of low volatility stuff over here that did enough to fool us. Could it recover? And in the end, it actually broke down. That made the double top, that M top over here that was kind of resisting at the 108, 109s levels, um, perform to target essentially. And then since then, it's been a lot of chop and churn. It's been a lot of chop and churn. So the framing we've given this is in a falling wedge framing. If you're following on the Crypto Sniper, when we were first over here, we were suggesting that the falling wedge may well have broken and that there's recovery now coming for crypto potentially. And where does it always start? So let's go back to our basics. Yes, this is a falling wedge and this broke. And that's why we've been saying recovery could be coming. But the important part of it is, where does it always start? What's been happening? What's been making the news if you're in the anti-fiat realm and trade of crypto space, etc., etc.? Well, it's been the gold movement. And this is the key firing order that we always talk about, that we've shown in our newsletter. We've done this diagram a few times for people. We talk about anti-fiats. The key anti-fiats are in the traditional finance world or the commodity world, etc., gold, silver, and mining. That will do very well in that dollar destruction, debt destruction environment. Remember, it's a debt-based collapse, which is the debt market fail, and also in lockstep, left-right versions, one fails, then the other, the fiats fail. Actually, last week, last week, the US actually did both simultaneously and replicated the UK pension crisis by both of them going down simultaneously. So essentially, when the rates go up on debt, of course, bonds should be going down in value, and the currency should be going up in value. This is the currency, that's the value of the bonds with your seesaw, because of the increase needed in yields. What actually happened is the seesaw broke around both halves. Very interesting key point. This is showing loss of faith. So not only did the money not go into bonds, the rates went up. We'll show you the US 10-year in a minute. But more importantly, the dollar went down on that as well, despite higher interest rates. So those are the TradFi anti-fiats. And the king, that's why he's in the king of diamonds, is in fact gold. And this is the firing order. We also showed you a big V12 engine in our newsletter, and we've tweeted it out a couple of times, showing that there's a firing sequence. And the firing sequence here is that gold goes first. This is why we've been talking more out of our market sniper hats and very much around gold. This is a rush to gold. The big buyers have been buying gold. It's gone up to 22.5 trillion in terms of market cap as an anti-fiat. Gold is the king. Now, what we're seeing, back to the falling wedge, is the king of crypto starts to move once gold's had a good run, because it's been pushed up. A lot of liquidity have gone in there. They start to look at the other things that will be left standing, your digital assets. So physical first, the big money's shown you, central banks, hedge funds, home offices, massive institutions have actually plowed into gold. And that's why it's going up. Nation states, etc. Now we're seeing a look back coming in to the number one. It's not ETH that's running or Solana. It's not ADA or XRP yet that are doing the running. It's the two kings. First, the king of the lot of anti-fiats, gold, and then the king of crypto, that's Bitcoin. And it still is and will probably still be for an extended period. So Bitcoin has moved, and that is the break out of the falling wedge. Little fractal of a wind up under this key level at 86. By the way, interesting level at 86. Some might argue that you got a left shoulder there as well, a spiky head, and then of course that's your right shoulder, for which you've got a bit more to go. So that will take you back up to the 100K mark. That's going to get the Bitcoiners puffing their chests out again. Yep, they're going to start feeling that they haven't been sitting on the sidelines. Till now, they have, of course, against gold. But the recovery has come, and now some of the digital assets are getting some of the money love. It doesn't take as much to drive Bitcoin up as it does gold, and the big money has been moving gold. Now a little bit is starting to come in for Bitcoin. Why? Because TradFi is in trouble. The bond market's in trouble in all countries, but particularly America. So this has turned into almost a long gold and now rolling into long Bitcoin short America trade. Now, to my American friends, I'm not attacking you. No one wants to see you collapse. You're good guys. But the people that have been running your nation states and the hegemony have overspent. They've destroyed the currency. They've fought every war, and they've got too much debt to roll. Of course, Granny Yoda Yellen of dumped 9 trillion for you to roll as well in an environment where you've got to cut because the interest rate bill is too high. And of course, the military industrial complex, which is how the rich steal from you through arms deals, etc., and overcharging. Blah, 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 blah. They love the wars, and that's how they line their pockets. So anyway, back to all of this. Bitcoin is now playing catch up. Not only did it break at that 86 we saw, that would have been the neckline triggering of the smaller fractal of a pattern, which also, as I said, had a micro HVF very many times. Small time frame setups, HVFs on a right shoulder to the upside. And sometimes you even have the inverteds. Look at me now over there. You can't see it on this low time frames for the downside on the left side. Yep, you can see it. You can find it. That allows you to get in real early and real cheap. Not claiming that one. I didn't do it. I've been totally immersed in gold and waiting for crypto to show some life. And now it's done so. So here we are. You're not going to hear it first. Our community is going to hear it first. But by the time we do a YouTube, it's usually there's a bit of life back in the old dog. And that's what's happened. You've shot, wait for it, right to a key level of significance. That's right. The neckline for that M top way back there in and around the 93K. And that was your M top, which was dying at the 108. There's the break. So you can see how it was resistance there. It was being support. Remember, these levels should just be run technically. So this has shown itself to be a key level of significance a number of times. You can see how many X's I'm having to make here to show the interactions with the 93 level. We know that number. It's not so obvious. It's not a 95, for example. But in each case, you can see multiple supports. You can argue there was quite a bit there, although they didn't breach it. It was tending to, once it broke, make target, it came straight back up. See it there. It also came back up over here. So you got, more interactions with that 93 level, and you're there now. So if you were to have a rest, possibly over here for a bit, but I can see this target being made and a technical run of the 100 being made, which will get people feeling a lot better in Bitcoin land, especially whilst gold's been doing the numbers it's been doing recently. And we'll talk about that a little bit more. So Bitcoin recovery, having been defense for the last 2 months, which means largely not engaged. We looked at a short at one point, and we've also been jumped back long a week or and a half ago on a number of things. I'll talk about that in a bit, but that's been tactical and it's been early and it's a little bit bottom picky. So Bitcoin in recovery. That's great news. Let's have a look at what else we've got here for you. So I want to just show you Bitcoin, the total market cap in essence. This hasn't been a great bull market by movement so far. You can see the value of the 7 trillion and the quantitative easing. And the key point we make is till now, you don't have that quantitative easing at your back. You don't have it. And one of the key reasons you don't have it is because the bond market is broke and there's too much that has to be got out in the meantime. So that's why this angle is a lot more tame. Now, Bitcoin's been better than that, it has to be said. The alts have been poor. Ethereum, particularly, who is the second biggest crypto by market cap, has been especially poor. We'll talk about XRP and some of the others as well in a bit. Let's just stay on the totals. So we made that target some time ago, and then since then, actually, Bitcoin has been petering around this target, only really got away, looked like it was coming all the way back down. So I wouldn't say this is beautiful structure for the total. It's kind of a channel. Some might try put it in a sleeve over here. I'm not so sure you make that one. You might get that somewhat. It's kind of in a channel. I'm not super excited about it there, but look, if it goes and makes a nice second, it could square up, as we sometimes say, if it doesn't do too much damage, it could do something like that. It could hopefully squeeze. We like compression. We want an asymmetric upside reward to a very tight risk. And that's what we'd like to see. If it just walks out slowly for a while and does that, that's fine. Remember, the environment now is not very friendly and consumer is absolutely wrecked. So that's our take. And as a result, because there's still a bit of retail in the markets, it's quite interesting. Key line was broken, and you may be getting a return move. What is the line we're talking about here? This is a basing ascending grind line that's literally been in existence since the 13th. It gave way against gold. What are we looking at? Bitcoin divided by gold. Let's just make sure everybody's on the page with us. Bitcoin divided by gold. What's actually happening is this has been squeezed and it's been slowing. It's been far harder to make headway against gold for Bitcoin. This basing ascending grind line is over 12 years old, and that was the first meaningful break that it's had. One candle, bit of a return move maybe, and maybe it goes back down, or does it come all the way back in and it's a false break? Time will tell. This is a log scale chart. Whenever you're looking at something that's 12 and a half years plus, that's typically what we do. So there was a decision tree here and it broke to the downside. We'll see how much more of that will occur. Right now, gold is actually resting. And isn't it an absolute tell? When I make this point, I say resting. This is on the 6 monthly chart. That's a huge candle. It's done a lot in quite a short time frame. So when I say resting, you have to go look at it on the daily to see, okay, you've had, for the first time in a while, 2 days down. You had 3 days down over there, only for it to absolutely moonshoot. That was an upside HVF on a lower time frame, by the way, which we traded in the community. You would look at it and say it's a pennant on a big time frame like that. So it's been doing very, very well for us, and we're happy about that. But it's funny that it's resting and now Bitcoin getting a little bit of a breather, so some of that money can find its way in there. This is one of the distress signals that tell us that this is a demand-destroying event, a gold-silver ratio, and this is broken to the upside. So gold has been overperforming relative to silver. Silver's not been moving to the same degree. Our opinion is there's a possibility, unlike most other precious metals, guys, to say that this could even stretch, which means things get worse before they get better. That means if we apply that logic to crypto, that Bitcoin might continue to assert dominance. I've got to come to dominance because we've been wrong on dominance. We try to call a bottom and it's continued to dribble lower. So we'll have a look at that chart in a minute. But this is highlighting that this can go higher first before lower, possibly even 175 if the squeeze works. Remember, just because it's a pattern doesn't mean you're guaranteed an outcome, but it has triggered over there. You can see it. So it's not just any pattern, it's a triggered pattern. So that's a warning indicator. We're also seeing warning indicators in USD JPY, which is seeing that the dollar has lost a lot of value. That's why a bit of bid is coming in at now, I would imagine. So I'm going to go through all the traditional TradFi before we go into some of the tokens. Stress signals and why we've been warning about this demand destroying event. That's a head and shoulders in essence. That could be getting ready to break over there. So just a bit of a warning. We're on quite a big time frame. We're on a monthly here, but and that is our concern. So it's not surprising you get a little bit of bid on dollar, say today, but you wouldn't want to see that break with momentum. You might get a return move, but that could be a serious localized top. That could be unwind of the carry trade. That's very risk off vibes. So don't lose your head about bullishness just yet. My view remains, without quantitative easing, there's no surgimentals in Bitcoin like the previous bull markets that many people have got accustomed to. You know, if we go back out to the monthly chart, these real surges that occurred on this period here, the last bull market, that was your great feeling day. 2017, that was a nice biggie. You know, those were your key moments that you really were enjoying when it was just runaway market. You've not really had that. Yeah, you look at the gradient on a log scale here. There's been good moments, but it's a channel to the upside, and it's been bouncing on the top side, and then it's been grinding down for quite a bit. You had a sideways here, you had a sideways there that went on forever, and you've had another 2 months of sideways here. So you know, it's not been just plain sailing, this bull market. Some people have almost say it barely feels like a bull market when you've just had a couple of months going back. But if I take this light away, that is good recovery on the monthly time frame. So it looks more bullish. And after gold having done so well and shown that there's loss of faith in the traditional system, this is a managed collapse, guys. You've got to understand that. Then people can start to understand why that turns into a nice hammer and starts reversing back. And Bitcoin, by being smaller, can do higher percentages than gold. No doubt about that. Don't trust it. Don't marry it, but make the money. And that's kind of how I feel. It's CBDC's training. And we'll talk more about that in a smidge. So we covered total, how it's actually underperformed because of the Ethereum and the alts generally. We've covered Bitcoin having had a downside break in its relative performance to gold. So its relative performance to gold is now starting to slow up. You can do other technical patterns now, which are indicating that rate of change relative to gold is slowing. Let's have a look at some of the other charts that I wanted to show you. We showed you the Bitcoin Nasdaq. Let's take a look at this guy. New SEC chair could be good for Bitcoin, says Michael Saylor. Okay. I think that's the whole idea of getting rid of Gainsler, is the enablement. He was the cock blocker, the handbrake, basically. So Bitcoin against the Nasdaq. It's important to point out we have a time frame by which any setup should perform, otherwise it gets closed. So it doesn't limp on forever. Not just an entry level, so you would have been triggered long here. So this one didn't perform to targets. The fact of the matter is it may well, in due course, I think it is. It's on the journey to do it in the end. But you would have had to sit a lot longer, and we typically have a cutoff point. So there you go. That's your trend channel heading up. And now it is outperforming the Nasdaq. You've got Tesla on a ridiculous price to earnings ratio in there at around about 98. Terrible results. It's a car company. 90 plus of its revenue is car, and it ain't selling anymore, thanks to the Democrats being all buttered and thanks to better battery cars coming out of BYD and other places. So, I mean, the Nasdaq's got a lot of downside, and I would expect Bitcoin to outperform the Nasdaq. And it's also super pricey, and TradFi is now getting looked at. America is being looked at, and it's on its traditional assets. The key thing is that Bitcoin is not perceived as uniquely or only American. It's a kind of transnational tool, is not owned by America. So American stock market, American bond market, and even the dollar are being rejected to a degree recently. Now there will be rallies, they will fight back, etc. The dollar will limp on even long after the Great Depression hits America and the great unleveraging of what is a very over-leveraged nation. But despite all of that, the dollar will still continue to varying degrees. But I would expect the asset classes there to underperform badly, as you see a bit of liquidity that's always been sucked into America start to flow outside into other capital formation areas. We've discussed how Dubai, the Middle East, and Singapore are our primary areas where we see capital flows likely to go for capital formation and other things. Okay, so XRP, let's talk a little bit about XRP. So as we've said, still a macro big bull on the $19 mark. Also had a bit of a downside, and I even on Twitter considered a short and took a short, and I had shoot and scoot rules because macro we're very bullish, so we didn't stay too long when it started to do this big hammer and it was on and off. But we did look at it and we were tempted. Why? Because we could have had a massive deleveraging that could have rolled into a liquidity crunch, and all retail in America could have been forced to have sold, and other parts of the world. And we could have gone into the bank failures and all of that. The full DDE, we've had first phase, in my opinion, of a demand destroying event. That's pulled the S&P down, it's pulled the Nasdaq down, it's pulled a lot of things down, it's shaken the bond market, it's pushed volatility up. But then you get a bit of respite. Isn't it funny how Trump, Mr. Negotiator, has now cycled back on all these demands out of China? China said nothing, didn't call, didn't do anything. He's pushed tariffs from one amount all the way up to 145% and is now pulling them all the way back down. And they've just stood there drinking their cappuccino or their chop suey or whatever it is they drink, and not bothered with him and let him throw his tantrum. A bit embarrassing for Americans and Mr. Art of the Deal. Art of the deal. Okay. But anyway, it didn't happen. It hasn't rolled. And in actual fact, now crypto, by not smashing down, has won a little bit of grudging respect in terms of its categorization, it's not an overpriced equity. It's not a bond. And if America does deleveraging, it's actually held up okay. So this was in a bit of a range channel here. We made an exception for that one spike that was a little bit Trump news orientated, a little bit of pump and dump. The cacocracy is huge, guys. This guy is setting up all his mates for insider trades all the time. Bassett is having briefings with JP Morgan, in the morning. He's telling them, no, that we'll walk back on the tariffs. They're going long, and then Trump comes out in the afternoon and says, no, we're going to walk back the tariffs. And all his mates. And you had the one with Charles Schwab next to him, who made $2 billion, and the other guy made $900 million. These billionaires getting leveraged long on and front running everything he says, and he's telling them when, what, and how before, and you're finding out afterwards. Retail is being pumped and raped and stripped, and any notion of Chinese walls, people not inside trading, not front running, is absolutely foolhardy. These guys are criminals, and they're ramming it home on you. If he's going to pump the stock market by some announcement by 5%, he'll have told all his insider pals well before. This is a self-enrichment scheme by criminals and crooks, and he's a deeply unsophisticated crook. Drumpf is one of the chosen ones that they put in there, and he's cheating like hell for everyone to steal from everybody else. You, the retail, are the sheep. Anyway, back to XRP. This constitutes a breakout as well now after a nice low volatility spell, getting closer to the grind line, nice little pop out. Now remember, it's not a runaway train, and these things can go up and then they can have a little bit of a return move and then they can square up and then go. So it still doesn't mean we're calling an absolute ripper next. It can take a time. You can still have return moves to the channel. So this has turned into a bit of what we consider a flag. And the head and shoulder risk that we got tempted to go for a short-term short on was over here. That was trading against our macro time frame, which we don't do for long, and it was very tactical, and it was on that break there. Could have gone down. You could have had a spiller. No, showed no sign of follow through. Shoot and scoot rule quickly to be out. Back up. This framing was showing itself to be a case. Typically, when you pull back in a channel like this, it's kind of a continuation structure, and this is actually a continuation structure break. So again, pretty positive. Important to remember, though, that Bitcoin has done better in percentage terms for now. It runs first. Back to that diagram, the king of crypto is Bitcoin. The kings stand up and walk. No one sits down and eats till the kings sit down and eats. In crypto and in anti-fiat, the larger the subset and the macro set, gold is first. Gold is first before the smaller king, which is Bitcoin. And we've learned now. So hopefully, as crypto guys, you realized the biggest king is actually outside the crypto market, and it is gold. So that's XRP doing okay. And on a breakout, this is XRP, by the way, divided by Nasdaq. And this is an upside HVF breakout in terms of its relative valuation to the Nasdaq. Now, just one thing to be careful on that. Nasdaq can go down, and this can perform to target without XRP having to go up. XRP could just hold its value, and Nasdaq could have a spill. So that's not my primary case. I've seen more likely XRP continuing to walk out and Nasdaq being relatively weak. So it could be Ripple going up, XRP going up, let me say, not Ripple, and the Nasdaq going down. It could be Nasdaq staying where it is and XRP going up, and it could be Nasdaq even inching up and going up itself, but XRP smashing it up. It can be all forms of combination. It's a relative valuation to the Nasdaq index. It's not a clear-cut determinant on the XRP versus the USD, although, as we've highlighted in that channel, it's broken out. I'm expecting XRP to mainly make ground, or I'll keep an eye out for a return move. It's typically not a pattern that I like to trade too much. There's no compression in it. There's no certainty. There's never certainty, but there's no high probability of a super surge yet, but that can still come in the flag. So we have to see if it return moves or not. We also spoke about Binance, and we spoke about it bearishly because it had this flat bottom, and this is looking more like it's going to be upside. That's right. So this one was looking bearish. This is what we'd call a great structure when it was down here for an inverted setup. This break here is actually more likely that it's going to be an upside break on a kind of descending triangle. So it's like a setup like this, where the compression was across the top and you're actually going to break to the upside. So we're probably going to be proven wrong here on the Binance trade. It's going to probably turn out like that, I'll show you other HVFs. I'm not mad for an upside HVF like this, even though we've got a target of 924 if it turns out an upside, when they've been so descending. But it can perform to 924, by the way, from 611. That's a 50% improvement. That would take the market cap up substantially. Whereas Binance by market cap, that's knocking on the door of 150 billion. That's quite impressive. And I would expect XRP to walk out a bit further, because XRP has now been overperforming against Binance and is holding on to the number 4 spot, which is actually the third token if you take out the stable coin. Pretty impressive from XRP as well. So yeah, 145 to 133. XRP would have to do a fair bit to flip USDT. Still about 12 billion still to gain, which if we go back bullish could indeed happen. So it could be looking at the third place. And if Binance had a real rip, that could also be happening. So we've covered XRP against the Nasdaq. We're showing you Binance. So a couple of places where we've been, we liked that. We said this would have been a very pretty bearish. We wanted it to be a bear one because it was pretty. As an upside one, it's a little bit less attractive because it's kind of descending. They can sometimes fizzle or they can overperform. So they're a little bit schizophrenic. You're not quite sure what you're going to get when you get that very flat bottom and a lot of compression across the top. It's a little bit low slung, but it does generate a target, and that target is through the 900s. So that's that. So what was the other thing why are we confessing to all that we got wrong? People like that, and we have been wrong this old season. So when we had this last run, we felt the next time we have a dip flush out on Bitcoin dominance. So what are we looking at here? This is where we were also incorrect. Bitcoin dominance. So here's our view. We've been bottom calling on Bitcoin dominance. After that one, I said probably the next one, because of these red lines. We're getting into these red lines are due for the last. So this is inverted, by the way. I'm just going to confuse everybody completely. We like looking at this in an inverted fashion. Inversions, you see that? Inversions. So this is Bitcoin dominance upside down. This is when Bitcoin's dominance is increasing. And if you go up, it's decreasing. So our overall macro expectation is that this bottoms at some point. So we've been calling for Bitcoin dominance in the future. Not yet. We're saying there's a turn to come, but in the future to actually fall right to 24% and below on a major breakout. That requires a reversal here, a big move up, and then a down move, and then a big squeezy. This is sometime in the future. We have made that clear. But we've also been calling bottoms on when that turn is going to be. And I drew these levels because this is where it reversed last time. It's in the box. And it's continued to bleed out very slowly, with Bitcoin getting more of the love. And we said after this one, I would expect the next one to be the bottom. And the next one was this one. It was a hammer there, and it broke down into the red zone. And I was like, I'd imagine maybe alts will start to run. And then what happened? Things started to get a little bit hot in markets. The demand destroying event started to rear its head, which has started, by the way, with tariffs. You had the first sell-off legs. It killed the Nasdaq down. It's killed the S&P down. It smashed the dollar and the bond markets. It's created a lot of volatility. All of that happened. In that environment, we revert. Okay, hold on. Bitcoin goes down less than the rest of the alts if we are getting hammered. So if it's, knuckling down, batten down the hatches and get back underground and pull the manhole shut, Bitcoin wins in those situations because it goes down less than the smaller altcoins. And that's kind of exactly what happened. We've bled out and we've run that low. So for us, we're only wrong when you run the low, and that run of the low is there. So this is not the bottom of the Bitcoin dominance. We had a shot at it and say we thought that would be the bottom. Still not. And that's because of the fear that came in. And fear holds them all down, but Bitcoin less so. And that's what's going on. We still hold out that this will turn before running this level, this low here. So it's got a turn, but now we've had one snatch of the knife and we've missed. And so we acknowledge that. So the alts, for now, generally still underperforming. Again, a lot of that's got to do actually with Ethereum, which is the biggest other market cap, who's been absolutely poor. XRP is not done too badly. relatively speaking. So let's go back and continue that chat. So BNB, that's the BNB USD. By the way, we just looked at BNB here. Let's just go and show you this. This is against Bitcoin. So we're talking about how much does Bitcoin outperform in all of this. And I'm just looking at this here and I'm saying, okay, if BNB is going to turn into an upside, it usually will go up more than, say, gold. That might be. It's still too early to say, and it's heading down. Remember, Bitcoin's currently overperforming. That might be ahead, and you may make some form of a low at some point. And if you were to rally up on Binance strength, then you might have a head and shoulder reversal. It's a lot of ifs because it's going against the trend. We need to see that. That doesn't happen the minute you run the head. That's as simple as that. The pattern's not coming. If it does stop before the run of the head and reverses up, and then gets to here, you might then have the outperformance of something like BNB to the others. Okay, and by the way, previously you've bottomed here as well. So it's a bit like the Bitcoin dominance. This is a bit of a zone of bottoming. You bottomed here. You can argue there was a very messy structure. I wouldn't call it pretty, by the way. A super right shoulder, and that broke up. And you probably made that target. I'm not going to draw it, but it looks by all intents that you made that target. So you reversed once only to die back down. Is it going to happen again and this time be almost a double bottom? Because then if I go to a bigger time frame and get a fatter Koki, you then end up with something like that on a bigger time frame with two inverted head and shoulders in the back. Remains to be seen. Could be, but this is typically a bottoming zone. So the alts might be on short-term notice for a bit of overperformance. That's what's might be. Wait for this to turn. Wait for it to return. Don't get ahead of yourself. We'll see. So that's a little bit of comparable to BTC. Because we are macro XRP bulls, I'm going to do XRP BTC with you as well. And let's just see XRP BTC. This is a chosen one. Trump has named it and stated it. This is the big overperformance over here, but it's got a bit choppier and a little bit softer. So let's just have a look at that a little bit more closely. Bit of a rounded top, a little bit of, this is certainly more Bitcoin's moment than XRP's, while this was XRP's moment. So we've had a bit of a rounding out, and this has gone on with regards to the risk. The bigger caps hold on more. BTC, much larger cap, already got ETF money. It sits a bit longer, stays a bit harder. It's not all down to retail. That said, you're getting a green candle now over there on the XRP BTC. Maybe this turns and then we start to head on back up and get another one, and maybe we get a third, and then we can maybe talk about squeezes, or maybe it just goes higher and just walks out. Who knows? Who knows? We'll see. All this is just one candle. It's a swallow that doesn't yet make a summer. And if we get a bit of fear and debt market shenanigan, I think the whole walk back of Trump is to stop the risk off vibes and get a bit of risk on vibes back going. So generally, this should be good for the alts, good for Bitcoin, but even better for the alts. So he's trying to stop it. Gold, funny enough, has been the counterparty, the most honest and fullest counterparty to Trump's shenanigans. So the more stupid he acts, the better gold does right now. Not exactly the same for Bitcoin and the alt markets. So if things calm down, they're a bit skittish. Crypto is skittish. It's small market cap stuff and it's skittish. So let's carry on through what we got. So I've also got a bit of Tron action going on here. So this is why we're happy to prepared to say, okay, BNB, we're going to be 180 degrees wrong on that one. There is a squeeze, but it's probably going to break to the outside. And we're seeing similar on other tokens. Now, these are still underperforming Bitcoin because Bitcoin's getting the dominance. And I'm not mad for that little channel, but you did get a breakout on Tron. You made your first interim, you pull back to the funnel. You made your second interim, you pull back to the first interim. We're waiting now to see if this can get its boots on and run you through the 27. It's not the biggest setup in the world. We're on a 6 hour, but you're looking at essentially this. squeeze, and you see how low vol it went across there. One more dip, and there's your third. So that's the setup. That's inherently, we think, has broken a little bit earlier, did reasonably well, then went a bit back to sleep, and now is probably getting with Bitcoin a bit of love again. So that's that. Why don't we do Tron BTC for you as well, so that you feel well loved and well served? These are the guys we are watching. Remember, the status tokens are interesting. A lot of people. Tron is super fast, super cheap for moving money, by the way. Um, so it's underperformed after meeting that key level of significance, which we would call a pullback zone. Let's just get this all into, let's go a little bit of a bigger time frame so that we can see candles here. So it's showing you Tron, Bitcoin, and what we've drawn previously. Let's go weekly, damn it. This captures a lot of the history. We've identified ourselves. This is a key level. It's been interacted with so many times. So 300 sats basically for a Tron. That is a key level. You've been rejected so many times when you're there. You sort of hung on, and then you were rejected, rejected, played back up, rejected. You're getting the story. You're getting the script. So it's not surprising to see as Bitcoin gets back on its bike, it's outperforming, and it happens to be at the 300 sat level. So Tron was once very well supported at the 300. Now it's turned resistance. This is a classic case of very basic technical analysis. Fundamental aspect really is that what was once support turns into resistance. You kind of had a long period around 300, 350 sats here where you're supported, and now it's turned into resistance. The last alt market, it looked like we were getting the break, and then the whole thing ended. You had the reversal draw there. That was it. But the alt market never really got going last time. So it came up to a value, that whole died. That whole bit died. Now you've got a broadening structure like this. Long run, we see that break out. We see that break out. There's a bit of a rising wedge, but might need to dip down first before it breaks out. So that's a broadening structure, but it's a downside broadening structure. Our split is showing you the direction, and it's typically an upside break that you get, because its pole is an upside one from there. So if we draw it in pink for you, because we made a mess now, let's Picasso out, shall we? Everyone for a Picasso? Yeah, it's the face like this. Like you were highly vaccinated. Let's just leave it at that. Cerebral palsy. There you go. So that's our Picasso. So that's inherently also typically in the end takes out this line across the top, but not necessarily yet. You could come all the way to the splitter. You could do a half move. We wait and see it. So also potential to overperform later if it continues, and if the de-risking doesn't affect crypto, which for now, given that Trump's walked to the back a little bit, seems to have calmed it enough for at least crypto to run. Let's just check on a couple of other things. By the way, this is what you've been missing. Miners showing you they can be cryptos too. This has been in our community. That's all the mining that we're doing. Let's go and have a look at, we're talking about de-risking US 10 years. So what are the other fear gauges? Ironically, the rates coming down is actually better. It's a calming. It points to recession. It points that things are a problem in the wonderful world of world recession, but it's not chronic. If the currency is going down and the rates are going up, like we had here, this was a terrible period. This was super sell America. Buy gold, sell America. That's your insurance policy. Those periods will come back again, and it's very difficult to put a genie entirely back in the box. So just bear that one in mind, guys. Just bear it in mind. Okay, I think we covered all we want to do in the crypto markets. That's the yen's rates going up, which points to the markets over there, and we've shown you the Bitcoin dominance. So overall, it's a good recovery. We've looked at a couple of the key ones. It's Bitcoin that it's all about. This is a good turn and rejection. This is turning into a smaller version of this continuation pattern here. before resuming some uptrend. But I expect it to be similar to this. You don't know how far it's going to go, how fast and how powerful. It's not going to be exceedingly powerful. It doesn't have quantitative easing at its back like it got here that drove that. And this was a much smaller market cap Bitcoin back then. So I think a walkout to the upside, which will still be pretty respectable. It's just not what crypto people are used to. It's not 10x's and 5x's on Bitcoin. Okay, so broadly bullish. Don't forget, book a call. We'll be watching this. We'll be maximizing the gold and the gold miners and silver. But then when it's crypto season, we focus hard on crypto, and we're starting to see the stirrings. We've been discussing it, the falling wedge break, etc. We've crept back in. You can find out what we're in at the moment. Quietly leveraged long. It isn't actually Bitcoin, even though Bitcoin is the first and move best, but it's who we think will do probably best. It usually involves HVF structure. It's in the big market caps. Book a call. There's a link below. Also, you can use Simple FX to use your crypto to trade crypto and or to trade traditional markets, which is kind of handy because when you get these off periods where crypto is just grinding lower, it wasn't a great short. We did shoot and scoot and we got out. We're just lucky not to lose money. But it wasn't a long period because actually Bitcoin went down. The alts went down, but they didn't go down absolute spill their guts down. It was just a bad, chop suey is what I called it. And whatever you try to do, long it or short it, there's no good outcomes. It's almost better just to step back. And that's what we did. We maximize the gold, maximize what's going on there. And then now that we're stirring, it's time to focus on crypto again. Okay, till next time, grab the Simple FX links for your trading. Don't forget, if you do want to buy gold, and I suggest not just being in crypto, guys, Pure Gold link and Bullion Vault is also below for you. So we look forward to talking further with you as things develop and as the recovery comes. So no news is generally bland news. We're seeing a stirring and we're observing and we're back in the game. Okay, catch you later. Thanks for watching and thanks for the likes and shares. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.